Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Getting Started with Technical Analysis. And the world of technical analysis can be a fun place, but it can also be a little bit intimidating. If we just look at the tools that are available on the Thinkorswim desktop trading software, there are hundreds and hundreds of technical studies available to the trader as they are attempting to analyze a stock chart. So how can a trader even hope to ever parse through all of that information, put together a trading system that might help them with their approach to trading? Well, today we're going to be talking about how a trader might build their own custom set of technical studies to create a trading system, and how it might not be quite as complicated as it might initially appear. Yeah, so this one should be a good discussion. Building a custom trading approach is always fun. But before we can get to any of that, though, and first of all, say hello to everybody out there who's chatting in YouTube. As always, great to see a lot of familiar names out there. Hello there, David and Derek, Jay Richardson, Scott, Jack, Andrew, Vic, everybody else. Thanks for joining us week after week. We always appreciate your attendance and your contributions to these discussions. If you're here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the fact, enjoy the presentation, but be aware that you're invited to join us in this weekly discussion. Now, I'm not typically the presenter here, I'm filling in, but this is a Tuesday webcast series, typically kicks off at 2 Eastern time. Love to have you here in the live stream as a member of our audience. And for the live stream audience members right now, we have Scott Thompson, who's going to be hanging out with them in the chats on YouTube. Scott's going to be answering any questions that I can't get to just during the flow of the presentation. Thanks for having my back there, Scott. And I would also like to issue an invitation to everybody that has an account on X. I would say you should be following your favorite presenters on X if you have that account. You can follow me on X at Cameron May CS. It's the best place to connect with me in between these live streams. But let's get into this discussion of building a custom set of technical indicators and how it might not be such heavy lifting as we might initially think. But as we do that, of course, we need to consider the risks of any approach to trading or investing. Risk is real, so bear these important disclosures in mind. The information here is for general informational purposes only and should not be considered an individualized recommendation or personalized investment advice. Investing involves risks, including loss of principal. Schwab does not recommend the use of technical analysis as a sole means of investment research, and any investment decision you make in your self-directed account is solely your responsibility. All right, so let's get to it. First thing I want to do is go to our Thinkorswim desktop trading software platform, and let's just confront this big obstacle in front of the new trader. So many tools at their disposal. When we go to the little flask icon up here at the top of the charts, in order to add a technical study or 2 or 3 or however many the trader decides to choose, we're presented with a menu of literally hundreds of technical indicators. And I want to try to simplify this process as much as possible using an analogy. So I'm going to lean on those of you who've been watching me for a while. I haven't brought this up in a while, but I did have a career before I moved to Wall Street. Does anybody know what that was? I haven't mentioned it in a while. So if you can remember, you've been paying attention. This is stretching all the way back to the early mid-90s. Before I picked up my first set of licenses and started my career on this path, I was freshly out of college. I actually opened a fitness center, opened a gym, basically. And if you've ever been, if you can think back to the very first time you ever went into a commercial gym, I think that there are a lot of parallels between that experience and the first time a trader looks at a stock chart, because there are lots of tools available to both the new fitness enthusiast and the new trading enthusiast, and it can be a little bit intimidating. So as we look at this list here, just imagine we're walking in the front doors, those glass doors taking us into a big commercial fitness center, and they're spread out in front of us are thousands of square feet of gleaming fitness equipment. And immediately we'd want to turn around and go right back out the door. It's too much. It's overload, right? Well, before we hit the panic button, maybe that new fitness enthusiast thinks, well, man, let me get somebody who's done this before. So they go to the center of the gym and they tap the shoulder of a trainer and they say, hey, I'm new here. Can you just show me how all this stuff works? Can you get me started on a fitness program? And so they talk to that trainer, and the trainer says, well, okay, so what you need to do is on Mondays, Wednesdays, and Fridays, you need to get on the treadmill and put in 30 minutes. And then on Tuesdays, Thursdays, and Saturdays, you need to do bench press and squat and deadlift. And they write out a program, and then they write a little diet for you, and off you go. And you get a few days into it, and you think, you know what, I would like a little bit more knowledge on this topic. So I'm going to tap another trainer on the shoulder and say, hey, can you give me some pointers on how I should be doing this new enterprise that I'm undertaking? And the second trainer says, sure, I'm glad to help. And they say, okay, so what you need to do is on Tuesdays, Thursdays, and Saturdays, you need to get on a stair climber. And then on Mondays, Wednesdays, and Fridays, you need to do incline dumbbell press, and you need to do some leg press on the leg press sled, and so on. And by the way, here are some diet tips. And they send you on your way, and now you're confused. They did not say what the first trainer said. So now it's a world of total confusion. But once we have a little bit of experience with fitness efforts, we recognize, oh, both of them said basically the same thing. They put us on the same route, just with a different way to accomplish things. Really what they both said is, well, we got to do some cardio, we got to do some strength training or some progressive overload resistance training, and we got to keep our diet in check. Same message. Interestingly, there are similar themes running through the world of technical analysis if we really boil it down to the essentials. So to a veteran trader, we can look at this list and it's not nearly so complicated, because as we look at one indicator or another, our mind automatically puts these things into different categories. Much like someone who's at the gym, they say, oh, well, a treadmill and a stair climber, they're both cardio equipment. Bench press, incline press, both building the upper torso. Well, with charting tools, we recognize broad categories, and not everybody has the same view of which categories exist, but generally speaking, a trader who's trying to build a trading system may start off with just a couple of categories of technical indicators, and as long as they have one or possibly two indicators for each of these categories, they might be a long step forward toward building their own custom system. The first category is a trend system, is a trend category or a trend indicator. A second category is a momentum indicator. Now, potential third and fourth categories, there can be volume-based indicators and there can be volatility-based indicators, but really, we're going to start off with those first two, trend and momentum, and then we're going to supplement that with a daily indicator. And you might think of it, it's not a perfect analogy, forgive me my analogies, it's kind of like cardio, weights, diet. All right. So let's deal with what some consider to be the biggest, maybe the most important one. I always have to say maybe, because no technical approach is a guarantee of success. But selecting a trend indicator. So again, let's go up to our little flask icon. And I know a few trend indicators. Let's see if some of you can chat in. Chat in, let me know. What are some common trend indicators or technical studies that some traders might use as they're trying to define which way is a stock heading and maybe which way is that stock likely to continue heading? Can you chat some of those in for me? And as you do, I'll go ahead with the spoiler. Some of the most common ones, possibly the most common one, is a simple moving average. Okay? I'm definitely going to add one of those to our chart. Now, a closely related cousin is an exponential moving average. I'm going to add one of those to our chart. This is just to illustrate that sometimes we agonize over the choice between, well, is it this trend indicator I should be using, or is it that trend indicator I should be using? Well, it may not be that important. It could be some differences in performance from one trade or another by degree, but how about we use for our example today, let's look at our simple moving average versus an exponential moving average. But yeah, some of the others, Jim says Bollinger Bands. Exactly. What are some other ones? I've in my webcast series that I do every week called Advanced Charting Techniques. I teach it on Fridays. We just recently did something called the parabolic stop and reverse, quite a mouthful. PSAR, PSAR is the acronym. That's another potential indication of trend. So there are lots of these. And once we have our eyes dialed in, we'll start to recognize these. A big giveaway with a trend indicator is that it's applied directly on top of the price chart, not below the price chart, but on top of it. Okay, so if we find some new technical indicator we've never heard of, and we apply it to our chart and we notice that it's overlaid on top of the price activity, it's very likely a trend indicator. But what I want to do here, let's do a comparison of two of the most common. Simple moving average, let's make this one with a look back period over the last 50 days. I'll leave this one green. And then our exponential moving average, we'll leave it with the same 50-day period. I'm going to change that to red. And now I recognize some people can't tell the difference. So you can't see the difference between green and red. Let's make our exponential thicker. Okay, let's click that, click apply, click OK. So here we are. Two potential trend indicators. Now, what is the purpose of a trend indicator? Well, to technicians of technical traders of stock, a common assumption is that once a stock has decided to go in one direction, unless and until something big gets it changed, gets that shifted in another direction, that trend is likely to persist. Now, obviously, stocks can change direction on a dime. It's not a guarantee that that's where things are going. But this may be seen as possibly the most important technical decision to be made. Because how often have we gotten into a stock trade and we figure out, oh, we were off by a day or two, but the trend kept going. And so those relatively minor timing issues were largely resolved just because the trend was persistent. So here we have our two trend indicators. The green one is our 50-period simple moving average. What does that mean? Well, you'll see a number over here in green, 202.82. Explicitly, what this is we're looking back over the last 50 days and getting the closing value of each day, adding those all up, dividing by 50, just getting an average. So when I see 202.82, I know that over the last 50 days, the average closing value of Amazon was $202.82. And to a technician, it can be interesting to see if we're buying above that average or below that average. It also can be interesting to see which direction that average is changing over time. So this is known as a simple moving average because it moves or it changes over time. Well, for some traders, they think they make an argument with a simple moving average. Why are we putting the same amount of emphasis on what happened 50 days ago? Why does it get to carry just as much weight as what happened today or yesterday? So in an effort to address that, the exponential moving average has been created, which puts exponentially more weight on what's happened recently than what happened 50 days ago. 50 days is still part of the equation. It's just that more recent activity can have a stronger influence on where this moving average is headed. So you'll see that this one tends to be more reactive to recent price changes. And therefore, for some, they might see it as a faster change in the trend indication. And it might make a trading system more responsive to emerging trend changes. Now, there are pros and cons there. Conceptually, the exponential moving average could get us in the direction of a new trend more rapidly, but it can also provide potentially more false signals. It can be a little bit early, either, typically just when shifting to a new trend. So there can be pros and cons to either one of those. But what you'll notice is, over time, don't they pretty much move in the same direction? Both are pretty much indicating the same trend under most conditions. Yeah, that really illustrates how there are differences, although comparatively subtle, in many of these trend indications. So, but step number one for our new trader who's trying to create a new custom set of indicators to make trading decisions might be identify a trend indicator. And again, how important is it to pick the right one? I know there's that pressure. I want to make sure I'm choosing the right one. That's kind of in my view. So that's a limited view. But in my view, it's kind of like saying, well, should I get on the treadmill or should I get on the stair climber? Is that really so much of an important distinction as just understanding how each of those machines work and then getting on it and starting to sweat? Couldn't two fitness enthusiasts both make significant progress if they just understand what they're doing and get to work? Yeah. So a technician may ultimately decide the trend indicator they've initially chosen, maybe by degree, not as good as another one, but initially pick one and go. All right. So there's our trend. And it looks like in this case, Amazon's being indicated as an upward trend for either. Now, another function that these indicators can play, or another role that they can play, is they might act as price floors and price ceilings. All right. I do want to point that out with these trend indicators. Kenny's saying, yeah, we could throw on some Bollinger Bands, which use these and then add an envelope. I'm not going to be using Bollinger Bands today, but I'm glad that we're thinking of other potential trend tools. All right, so for today's example, let's just clean this up. We've seen the relatively subtle distinction between an exponential moving average and a simple moving average. Let's just stay with the simple for today. Okay. So that's step number one, maybe identifying a trend study, adding it to the chart, learning how it works, and then even within an established trend, though, some traders will note, like with Amazon, we had this period where the stock was going up, but even during that optimized time for price performance, there may have been, at least in theory, better times for a trader to take a new bullish position than at other times. So, for example, we notice that a stock, instead of just going straight up with our trend, it tends to stair step in that direction, making what we call higher highs and higher lows in the case of an upward trend, or lower highs and lower lows in the case of a downward trend, but moving through these stair steps or these cycles, these short-term cycles. So our would-be bullish trader might say, well, step number one has been accomplished, identifying the trend, but wouldn't it be nice if we could use something else to spot where we might be closer to those trend lows versus closer to those trend highs? And this is where we might recruit a second technical study. And generically speaking, if we're talking about broad categories like cardio equipment or weight equipment, we might call this category a momentum indicator or an oscillator, right? So what kind of oscillators or momentum indicators can you think of? Go ahead and chat those in for me if you would. Now, one of the big keys about whether we're dealing with an oscillator, or there are a couple that I can provide, whether we're dealing with an oscillator / momentum indicator versus like a trend indicator, is that it's typically charted below the stock price. These are general rules of thumb. They're not exclusively accurate. They're not accurate to say about every possible indicator out there. There can be exceptions. But Kenny says the market forecast tool. Andrew says the MACD tool. Brooke, ADX, Paul, RSI. Yep, a lot of those. There's some really good examples there. So let's, how about we add a couple? I'm going to borrow, how about Andrew, Vic, Isaiah, you said MACD, and Jay Richardson said MACD. Brooke says MACD. Paul and Vic said RSI. Well, let's put a couple of these oscillators / momentum indicators on here. I'm going to click on the Edit Studies. Let's type in MACD, and I'm going to choose the MACD histogram. Let's add that to our chart. Let's also put on the RSI, and we're going to add that to our chart. Right. What I want to do here is just do a little comparison. Observe the similarities between these so the trader can feel more comfortable. All right, if they're so similar, maybe I can just pick one and go with that for now. We can always revisit. So let's apply those to our chart. And as we do, I want to give a quick heads up. I'm kind of brushing over some of these. I would love to spend all day talking about just a single indicator so we could thoroughly understand it, like the moving average, like a MACD histogram, like an RSI. If we don't know about something one of our coaches mentions, where can we go to learn more about it? Well, we can just go to our channel. Make sure if you're new to this stuff, if you haven't subscribed to our YouTube channel, do that right now. Go down, click on the subscribe button down there in the lower right-hand corner. It literally only takes a second. It doesn't cost anything. But the Trader Talks Schwab Coaching Webcast YouTube channel is where we house our playlists of previous webcasts. We can go to those playlists and look through by topic, or another nifty thing we can do is just do a search. So here on the search function, how about we look for MACD? We don't know anything about MACD. If I hit enter on my keyboard, hey, what do you know? Using the MACD indicator for short-term stock trades. In this webcast, I explain this indicator in much greater detail than I'm going to do today. Or if we had an interest in RSI, let's just type in RSI. And here's James talking about variations of understanding for the RSI. There's using relative strength index to plan a stock trade. Okay, so back here, now that we know that we have other resources outside of this live webcast, or if you're just watching on the archive, you know that those other archives are available. Let's observe the similarities between the MACD and the RSI, because we tend to think of these as two very different things. Paul says the TTM squeeze. That's right. I've covered that one just recently. Yep, Paul. But you'll notice with the MACD, it tends to go up and down on a horizontal plane. It's rising and falling, falling and rising over a series of hills and valleys. And what I want you to do is visually pair that with the RSI down below. And if we took the highs and we fit them together, it would almost be like a puzzle piece. Not exactly a puzzle piece. This one would be a frustrating puzzle, but pretty close. You'll notice as our MACD is hitting lows, our RSI tends to be hitting lows. As our MACD is hitting highs, our RSI tends to be hitting highs. And you can see that all throughout my example 1-year chart. So if you have trader A who's looking for, let's say, momentum shifts using the MACD indicator, and trader B who's looking for momentum shifts using the RSI indicator, is there likely to be a huge degree of difference between those two, assuming the way they look at their signals is similar? Probably not. There's probably going to be a lot of overlap. Certainly there's going to be some difference. But the point here is there's a temptation to stack up technical indicators one on another. And I think that there's some interesting motivations for that sort of thing. There's some psychology behind doing that. It's kind of like the person who's trying to get into shape. I know that when I first thought I was going to get into shape, here's what I did. I went to the gym and I did 5 minutes on this machine. I did 5 minutes on that 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 machine. I spent like two or 3 hours trying to do everything all at once. Totally lacked focus. Meanwhile, you have somebody over on the other side of the gym who's just buff, shredded. And they're focusing on one machine and just giving it their all. You got someone on the other side of the gym, just as fit, focusing on another machine, giving it their all. Yeah. I think that there's a motivation to try everything so that we don't miss anything. There's that FOMO. There's that the concern of just making the wrong decision. Now, in fitness, in the fitness circles, they have a word for this. They actually call it junk volume. We're doing a lot, but really literally kind of spinning our wheels. So that's definitely a possibility. But another motivation with trading is, aren't we trying to improve the odds of the trade? And if we are convinced that using one technical indicator might move that needle from just a 50-50 chance to maybe we're moving it to 51 or 52 or 53. And then maybe if we threw in another indicator, we can move to 54 and 55 and 56. And maybe if we throw in another indicator, it's 57, 58, and we're working our way toward 100% certainty. We know If we can just get that magical combination of technical indicators to all signal at just the right time, that's a guarantee that our trade's going to work out. It's not a guarantee. No combination of technical indicators carries a guarantee. And what's very likely happening is we may not be moving the needle at all as we're adding those additional indicators. And in fact, the needle might start moving the other way. Let me ask a question for anybody with some real experience. Paul, you already answered it. Yeah. If we're waiting for that perfect constellation of signals from 15 different technical indicators to all happen on the same day at the same moment, none of them in disagreement, it probably is never going to happen. And we wind up looking at chart after chart after chart after chart, seeking for perfection that doesn't exist. And we're now suffering from what we call analysis paralysis. Yeah. And I want to go to the opposite extreme here for just a moment. Instead of a very cluttered up chart with lots of technical indicators, and I'm not saying there can be no value, for some traders, they prefer having a relatively complicated configuration of technical indicators, and that's their approach. That's fine. But is there any validity to someone else just saying, you know what, Cameron, all I do is I look at the highs and lows. And when a stock goes down to a low, that's when I prefer to buy. When a stock goes up to a high, that's when I prefer to sell. Just doing support and resistance trading, does that potentially carry some validity? Healthy You says, can you speak about the projection oscillator? I'm not going to get deeply into other oscillators or indicators today, although I haven't covered that one in a recent webcast, so I might have to put that on the list for future. But yeah, for some traders, they don't use any technical indicators. They just trust in their own analysis of price movement, and that's their approach. So the bottom line the point that I want to make here is some traders prefer lots of indicators. Others prefer very few to no indicators. And there can be validity to each of those approaches, and none of them are a guarantee of performance on an individual approach. So what I'm going to do here today is let's just clean this one up again. Let's come up to our little flask, and I'm going to take that RSI off. And you RSI fans just went, oh, no, you should have chose the RSI and got rid of the MACD. That's okay. I'll just click apply. I'm not giving a sales pitch for a specific combination of technical indicators. I'm just talking about sort of some governing principles that might assist in the creation of a custom study set, and that everybody should feel empowered to create their own study set through whatever process appeals to them. All right. So here we have trend, which, let's say our trader is looking for a rising moving average indicating increasing stock prices over time. Within that trend, maybe they're looking for their MACD oscillator to dip low, possibly indicating that selling momentum is underway, but shifting to buying momentum. This is a pretty typical interpretation of this. When we see the histogram falling, that might be indicating that prices are likely heading downward. But when there's that up tilt, that might signal that we're set to start moving higher. All right. So let's see. Guy says, is there a tool or way in Thinkorswim to test an indicator's predictive value against prior price movements? A quick way to do that, Guy, is to just construct one's own preferred technical approach. Go to a longer term chart. I was going to put this in at the end. I don't mind discussing it right now, but we can go to a longer term chart, like the 20-year chart. So let's switch up our time frame here. This is a quick way to do it. There are other ways that we might do this. Let's leave this on a 20-year daily chart. And what the trader can do is use the scroll bar down at the bottom to zip back in time and zoom in on some time frame. Just click and drag to zoom in, and then start applying this technique. Okay, so here we had a period where the moving average was rising. Maybe during this period, they see the trend is up, possibly time to be looking for bullish signals. Is there a recent momentum shift? So here we have like an upward slope to our trend line. We see our momentum coming down and starting to rise. And some of you said, hey, Cameron, what about this one back here? That was kind of a shallow dip. Some might look for a steeper dip. That's one of the one of the more subtle differences between the MACD and something like the RSI, where the RSI is more demanding. It actually provides a line to determine, well, how deep is deep enough on one of those momentum drifts. So here we have momentum coming down, starting to shift up, and that might be a signal that right around here, at least these two studies are starting to come into agreement. Now, let's get even more specific than that. So that's one way, guide. We could go through and look at a whole series of signals like that very quickly. We could just switch up the symbol, look at some more, switch up the symbols, look at some more, change to a different time frame. This one's back in 2009. We could just randomly move to 2013, see if things change as well. Another thing that can be done is there is a healthy you like that, you love that practice idea. We can use the think back tool. We can use something else I want to talk about. No, I'm not going to get into that today. Anyway, I want to focus on just one additional refinement. So if you want to think about it this way, I'm beating my fitness analogy to death. My apologies. Not everybody cares about what goes on at the gym. Not everybody worries about, getting in let's say a structured fitness routine. Their lifestyle might be perfectly good at keeping them healthy, whatever. But how about let's just say our trend, maybe we'll kind of call that's our cardio. Momentum, maybe we call that our strength training. Well, where's diet? Where is that final refinement? Well, for some traders, they may be looking within an established upward trend. They've taken care of a big technical decision with a momentum shift in what appears to be the right direction. That might be signaling it's getting close to time. What about on an individual daily basis? All right, let's zoom back out. Let's go back to the 1-year chart and add a third element to a custom technical approach. And that is using individual candles or maybe individual price bars or other things to zero in on a specific day saying, okay, trend is there, momentum's there, today's the day to enter. How might we do that? Well, you're going to see a lot of our coaches using just candle charts, which literally are an interpretation. It's sort of telling the story of an individual day worth of trading, but it's not the only chart tool that might tell us about a single day. We also have price bars that can tell us a similar or the same story. What else is there? If we came up and we talked about different styles of charts, my style of chart right now is candle. Well, we also have bars. We also have Heikin Ashi candles. We also have candle trend. If you don't know what these are, guess what? You might want to go check out other webcasts that cover those things specifically. So for example, if I went to our channel here, and let's say I just heard about this thing called Heikin Ashi, but I didn't know how it works. As a matter of fact, let's use the shorter one. I'm just going to use Ashi. Like that, hey, what do you know? Trading stocks with Heikin Ashi candles. And I do a comparison with traditional candles, right? But in any case, our trader is really starting to zero in on the timing of the entry here. Could be on a daily chart, could even be on an hourly chart, but I'm going to use an individual candle in this case, just as our example for today. Not everybody knows even what an individual candle tells us. So you'll notice there are two types of candles. Let me click and drag so I'm zooming in on just this most recent activity, all right? So if we look at the two different types of candles, we have red candles and we have white candles. Each of these are telling us 4 things about the trading day. So a white candle tells us the high, the low, the open, and the close of the day. And that's exactly what a red candle does. So if I look at, for example, let's look at this candle from 2 days ago, I can tell that the lowest trading price of that day was down here at the bottom. And if we look over here in the upper left of our chart, it'll give us the individual values of each of those 4 points of interest. H for high, L for low, C for close, and O for open. Open, high, low, close. So if I point at this candle from 2 days ago, I can see its opening price was at 219.92. Its high was 223.30. That's up here, 223.30. Low was down here at 216.74. Then our open and our close were at 219.92. Close was at 223.30. But how do I tell that? Well, that's the body, the box here, the rectangle of the candle. With a white candle, the bottom of that body is the opening price. The top of that body is the closing price for the day. So let me move back here to this candle. I can see this was the low, that's the high, that's easy. It opened down here at the bottom of this body of the candle, closed up here at the top. I know that because it's white. If the day's trading caused price to fall from open to close, guess what color this would have? It would be red. Yep. So if I look at this day, what I can tell with a glance with a candlestick is what I'd call the story of the day. I can look at this day and see pretty much I could tell myself the story. Looks like we opened right down here around 213. We rallied up to a high. I'll actually go back on that story a little bit. Opened around here 213, dropped a little bit at some point during the day, down to a low of around 211, 212. Then we rallied all the way up here to about 218, and then finally settled back to about 217. So if we opened at 213 and closed around 217, overall, was that a good day or a bad day for the bulls in this stock? Probably a pretty good day on Amazon. With this day, we opened up here at the top of the candle, rallied a little bit higher, but through the rest of the day, or very likely through the rest of the day, we sold off and sold off and sold off and hit a low and then closed close to that low. Not a good day, red day. So that, when paired up with trend and momentum, it might assist the trader in just really recognizing, well, does it seem to be that today is the day where we're starting to get not just the trend working in our favor, not just momentum shifting, but even intraday price movement is moving in what we might consider the correct direction for a bull. Not on a red candle day, they might prefer a green candle day. Now, I'm using candles as an example, but Heikin-Ashi candles might be used similarly. Bars might be used similarly. It's kind of like one person might prefer salmon in their diet, another person might prefer fish in their diet. They're trying to get their protein in. Right? Again, sorry, I know I've totally beaten that analogy to death, but the bottom line concept here is that if we're piecing together a custom set of indicators, these sorts of themes may be helpful in just helping to build that, and might wind up with a set of indicators very different from the neighbor's set of indicators, but essentially built to accomplish a similar objective, which is hopefully to make money, right? There we go. So trend, momentum, and then day-to-day price activity. So today, how do we look? Trend is up on Amazon. We see that our momentum has recently shifted. And actually, that day right there, if we zoom back in again, here's our upward sloping trend line. We see a shift from bearish momentum to slight bullish momentum right there, accompanied by a white candle. So even on a daily basis, on an intraday basis, that may have been a good time for entry. And in this case, it looks like that might have panned out, at least in the short term. Healthy, you like that? Good. All right. So once we've constructed a set of indicators like this, now we can go back in time, or what we could do is just go over here to a watch list, like I'm using the S&P 100. We can find that in the public watch lists. And we can just go down through and see how things look at the moment. Here's Google going up. Momentum oscillator seems to have dropped down. Right there may have been an entry signal for a trader using this combination of indicators. What if we go on to Meta and see how that looks? Upward sloping, dip in that momentum. There's our shift, accompanied by a white candle. This might have been an entry signal. Anyway, guys, I hope this has been fun for you. I've just used some examples. What you may want to do today, if you're interested in experimenting with your own set of technical indicators, go to your paper money account, select a trend indicator, select a momentum indicator or an oscillator, and then settle in on an indication of a daily indicator, like a candlestick or a Heikin-Ashi or price bar chart. See if you can design your own. Guys, this has been fun. I hope you didn't mind me stepping in to fill in this webcast. I'm going to be moving back to my normal webcast series for the rest of the week. I was just here on a fill-in basis today, so I'm going to give you an invitation to find me and follow me in my other webcasts. If you want to track us down, here's a quick way to see who is teaching what. Go to that Trader Talks channel, click on posts, and there's a calendar right there. Look at this. It's kind of handy. You can look for the picture of the person you're looking for. So, for example, I teach this webcast on Mondays, that one on Tuesdays, this one on Wednesdays, this one on Thursdays, and this one on Fridays. Everybody, go enjoy the rest of your day. Also, make sure that you're following me on X if you're not doing that already. There's my X handle at Cameron May CS. That's another thing. It doesn't cost you anything. It's another resource that's available to you. Best place to connect with your favorite presenters in between these live streams. Make sure you're subscribed to the YouTube channel. You can go click on subscribe right now. Jackson, you like that? Good. All right. I will get this, we'll try to get this posted quickly. With the vast majority of our webcasts, we get them posted to our YouTube channel after they're concluded. Every once in a while, there might be a technical hiccup, but this one is scheduled to be added to the channel archives, so you can look for that. And also, thank you to everybody that's already clicked that thumbs up button. That's always appreciated. Got 138 people watching. 46 have already clicked the thumbs up button. That's definitely appreciated, guys. That's like closing applause for the presenter, and it gives the presenter's webcast a boost in the YouTube algorithm, helps more people find these things. So thanks for doing that for us. If you make it a habit every time you watch and enjoy one of our webcasts, click on that like button. All right, go have a great rest of your day. We got a few more webcasts coming up, so go enjoy those. I will see you in a future webcast. I'll also look for you on X. But whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.